Let's get ready to rumble!
Benzinga Nation, jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today.
Interesting, different, unique, innovative companies.
Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna.
The best trade idea resource out there. Yo, what's going on, everybody? Happy Tuesday, one day before my favorite day of the week, hump day. What's up, everybody? You are here on the Power Hour. That means you are at the Trade Idea Show. That's what we're going for, guys. For these next 60 minutes, we want to get the ideas flowing. There should be no better resource, no better way to spend 60 minutes of your day for finding trade investment ideas than on this show. Ideas will be flowing from myself. They will be flowing from the guests that we bring on. But most importantly, let's get the ideas flowing out of the chat. So I'm going to make the first ask of the day, guys. What's up? What's up? Drop your tickers in the chat. If you have stocks, if you have tickers that you want us to take a look at, if you have stocks or tickers you want us to take a look at, put those tickers in the chat. We will get to them. I promise you we will have time today. And we're going to get rocking and rolling through it. On my radar for the day, let me give you just the list of tickers that I have queued up for us. Tesla. We took a trade in Tesla last week. We made an options trade live on the show. This is a swing trade, like a 1-2 week trade time horizon. So we're going to be checking in on that one and seeing how we're sitting on that trade. Torchlight. We had to talk about Torchlight. Voyager Digital, carparts.com, Celsius. Those are the list of tickers that I'm going to try to get through in, let's call it, these next 15 minutes or so. All right. So we are going to be flying. Then we're going to be bringing our first guest of the day on to talk about UFOs. Seriously, I'm not joking. We're going to be talking about UFOs. It's going to be a space play. So stay tuned. We're going to get to that right at around 12:30 ET. I see your tickers flowing through the chat. We will get to them. I see that somebody dropped in Alfie. Let's start the day off there. Ticker ALF. I'm going to go ahead and share my screen. Boom. Look at this one. Ticker ALF. Alfie, we had the CEO on the show last week, guys. Literally last week on the show. People gave the bullish breakdown on it. Stock up 65% today. Why is it up? Check it out. I just threw this one up here. I'm going to drop this link in the chat, guys. Share this tweet around because that's what we're out here doing for all you. But Benzinga broke the news on the stock. So the Benzinga news desk, we were the first ones to report that Alfie is going to be bringing a buyback to market. The company told us that they're going to be executing a $2 million share buyback. And then re-emphasize which the CEO talked about when he was on this show on the Power Hour last week. Talked about keeping the float tight and being out there for the retail investors is a priority for the company. 2 million shares, right? It may not seem like it's a huge buyback, but I mean, it's a relatively small cap stock that we're talking about here. So stock is up 65% today. If we look back over the past month, I mean, it's had a monstrous run. Again, guys, you saw it first on this show. There we go. Shout out Mike in the chat. He got into this one. I'm going to throw this out here, guys. If anybody else was in Alfie, you found it on Power Hour and you are appreciating that 70% run that we have today, give me the heck yeah in the chat or something. You can do a 1, whatever, if you're lazy. But boom, first ticker of the day, ALF, huge winner. We see the stock did put in a high around $14. If you're not in this one now, you're looking for a day trade or a swing trade on the stock. $14 is the level to check out. That's one that I'd be looking for if I don't have a position now and I want to get into it. Yeah, there we go. There's a ton of zingers in the chat who got into this one. All righty. All right. Next up on the list, let's hop to some of these next tickers that we have. Tesla, ticker TSLA. If you guys recall last week on the show here, I'll zoom this in. This is a 5-day chart, 5-minute candles. Last week on the show, we put together a bullish thesis on Tesla. And the way that we got long the stock is that we actually sold puts against it. So rather than buying shares of Tesla outright, we sold puts against the stock. Let's pull the live brokerage account into view here on our screens. This is my real interactive brokers account that we look at every single day on this show. So the trade that we made on Tesla is we sold the July 2nd. So what is that? That gives us about 10 days out. So we're still 10 days out. It was 2 weeks out when we made the trade. So 10 days out from now, we sold the July 2nd 550 strike puts. Let's see if we have an average price in here. Okay, so we sold those puts for an average price of $5.39. So when we made that trade, we had $539 credited into our account. The risk that we take on is that we may be forced to buy 100 shares of Tesla for $550 a share. Okay, so we got $539 that day when we placed the trade. I believe it was last Friday. The risk that we take on is that we may have to buy shares of Tesla for $550 each. And so right now the trade is basically unmoved. So we have an unrealized gain on the trade of 4.6% right now, basically unchanged. Going ahead and looking at the chart, I still feel fine about this one. Again, as long as Tesla stays above that 550 strike by July 2nd, we are fine. We keep the $550. We're going to roll that money into the next trade. If Tesla falls below $550, let's say it falls to 500, we're down $50 a share in our buying up shares of Tesla. The reason that we came to that 550 strike price is we saw all this buying in here. We saw 1 day. These are daily candles. Now I'm zoomed out to 12 months daily candles. So we saw buying here. Here's 1, 2, 3, 4, 5, 6. I mean, there's just a cluster of buying whenever Tesla gets around that 550, 560 level. So that's why we went ahead and we picked that for the puts that we would sell. Again, we only do this on stocks we would be fine owning. So I'm going to drop this one in the chat. Second question of the day. Let's fire it up. You guys like the Tesla trade that we put on? You're feeling good about Tesla staying at or above $550 for the next 10 days. Drop me a 1 in the chat. If not, drop me a 2. If by the end of this week, Tesla's moved up or stayed flat, like let's say it gets up to 650 or so, we'll probably have realized about 70% of everything that we can realize out of that trade. We'll go ahead and close it out just so we don't need to worry about it for the second week. But there is the move there on Tesla. And now I'm starting to see the voting come into the chat again. 1, if you like the Tesla trade. 2, if you don't. This is no, World War II. You're not, Switzerland sitting on the sidelines, not picking a side, or maybe it was Sweden. I don't know. One of those countries, you got to pick one way or another. Don't worry. You don't have to actually make the trade. I do that for you. So that way we can all hang out there and watch it. So, all right, there's stock number 2 of the day. I told you we're delivering on trade ideas. We're keeping them flying. So 1, we had ticker ALF. 2, we had Tesla. Let's do one more before we bring our first guest of the day on. Voyager Digital, ticker VYGVF. And all the crypto stocks really are just getting hammered today. Here's a 1-year chart, daily candles. You saw Voyager break below some previous support that it had in place right around $15. This is, of course, happening with the price of Bitcoin. If we just take a look at the Bitcoin price, here's a 24-hour chart. Right, we got hammered. So 24-hour move from off of the low. Let's just see that really quick. So off of the low, down 9%. There has been some dip buying and some rallying that's happened, but all the crypto stocks have gotten hammered with that. And so let's talk about this. So Voyager Digital, where are we at with the position? Yesterday, producer AB snuck onto my Twitter. And posted this. Yes, I accidentally left it signed into the computer. Said, what crypto should I buy right now? I will buy the most liked reply. Check this one out. Where is it? It's somewhere in this thread. All right, Steve Ehrlich, CEO of Voyager Digital, commented on the Twitter thread and said buy his stock, ticker VYGVF. So you have the CEO of the company themselves saying, what's the best stock to buy? Mine is the one. 205 likes, 15 retweets on that one. So that is absolutely the winner. So I guess I have two thoughts here. You do have weakness in the crypto market, which of course doesn't help, right? I mean, we're looking at red week after red week after red week on the price of Bitcoin right now, and the rest of the coins more or less following off of that. So you have weakness in the crypto market. You do have the CEO coming out as a bull in the stock. The company does have a buyback in place. They established that buyback because they said if our share price ever gets to a point where we think it's significantly undervalued, we're going to start buying up shares. So you have that as a bull thesis on it. But I really want to dig into the valuation on this stock. It's something that we used to spend quite a bit of time doing on this show. I closed the initial position that I had out a couple months ago, somewhere around $24 per share. But did recently get back into it. So I'm going to leave this promise for you guys. Ticker VYGVF. We're going to do like some DD together. I get a lot of questions, people asking, how do you do due diligence on a stock? How do you come to a valuation number on a stock? So on a show later this week, either tomorrow or Thursday, we're going to dig into the numbers together, come to what we think is a fair valuation on this stock, and then make a decision as to whether or not we're going to add the position, close the position, or let it ride. So if you guys do not tune into the Power every day, you don't subscribe to the channel, do that now. Like this stream today, share this stream, and then again, stay tuned because we're going to be doing some live analysis. We'll whip out the Excel, we'll whip out the SEC filings and dig into it. But all right, guys, without further ado, I do want to bring our first guest of the day on. Again, we always deliver on our promise to bring you guys interesting guests, to bring the ideas. We got a ton of stocks left to talk about after we come back from our guest. I'm going to go ahead and bring him on. Andrew, what's going on, man? Too long to talk.
Couldn't agree more. Great to be here, Luke. Is anyone having more fun than the Power Hour crew today?
No, I have the most fun every day. I'm pretty sure. I just, you got to be jolly and have fun, or otherwise, what's the point, right?
Absolutely.
All right, so what's happened in your life over the past 2 years? Because I think it's been about that long. The last time I would have seen you would have been pre-COVID in New York. I'm sure we grabbed a lunch or something like that. But I mean, it's been quite a while. So what have you been up to? And I guess before we jump into the personal conversation, why don't you introduce yourself to the group as well?
Hi, everyone. Andrew Channon. I'm CEO of Procure Holdings and Procure AM, the company that brought you UFO, the world's first pure play space ETF.
There we go.
Last 2 years, it's been wild. There's too much to talk about.
Have you gotten a dog, a cat? You have some house plans?
Got a dog, got a baby, got a new apartment in New York, and we're keeping very busy over here. We launched the company Procure Holdings. We're doing a lot of really exciting stuff, not just in the ETF world. We helped a group that we had been working with for over 3 years launch an LGBT fund under the ticker LGBT. We're keeping busy and keeping Manhattan alive.
Okay, so past 2 years, quick summary. You launched a space ETF, you got a dog, and you got a baby.
And probably a bunch more, but those are probably
out of those
the
three, which is most exciting? We'll go with the ETF.
I'll let you make the decision.
All right, so everybody, the ticker is UFO, and you know how much we love our appropriately named ETFs on this show. Again, UFO. Somebody in the chat drop that in the comments for Zinger Nation, so everybody has that ticker handy for them. But all right, Andrew, you're telling us that this is the first pure play space ETF. Obviously, we're just looking at a 1 year chart, daily candles right now. Performance has been hot. I mean, it looks like we've moved 50-ish% over the past 12 months or so. But Andrew, what is in this ETF?
So we have a wide range of companies that are doing all different things across the space industry. The underlying index was co-developed by a former director of research at the Space Foundation, one of the individuals that actually helped define what the space economy is and actually tally what space revenues are, the companies that are involved, the sub-industries and whatnot. So we have a really strong team working to build out the index, but we have a strong 80% rule in the underlying index where it rebalances. At least 80% of the weight of the index needs to have a majority of their revenues coming from space-related businesses, activities, and services, but also realizing that some of the diversified aerospace and defense names, think your Boeings, your Lockheeds, and such, they're major players in space, but it might only represent 20% of their revenues or over 500 million in revenues annually, but they're still major players. So up to 20% of the underlying index at rebalance can be invested in these more diversified, but still large players in the space industry. So you have satellite manufacturers and operators, launch companies, rocket manufacturers. You even have some of your communications, think broadband and 5G internet supporters and whatnot. So you have a really wide range of companies and even space tourism like Virgin Galactic, which seems to be making some pretty big moves today.
Okay, and I'm the slowdown guy on this show. You'll learn that quickly. So just to recap, let me make sure I understood this right. 80% of the ETF holdings are in businesses that have the majority of their revenue as a result of space activities. Is that accurate?
Correct.
All right. And guys, I just went to the website. By the way, awesome website design. Just like we love our awesome ETF tickers, UFO. It doesn't get a ton better than that. You might give our friends at Direction a run for their money. They've got some pretty good tickers. But the website totally fits the brand. I'm looking at the top 10 holdings right now, guys. You have them up on the screen, but I'll read a couple of them out. We've got Orbcom, Maxar Technologies, Iridium, Dish Network, Virgin Galactic, Trimble, Garmin, et cetera, et cetera. So Andrew, let me ask you this. You launched the space ETF. What was the impetus for doing it? What was it, something that you guys looked at and you said, hey, this is going to be a big market at some point in the future? Did you see user demand for it? I mean, why now? Why this fund, et cetera?
I've been involved in many first to market thematic ideas over my career. Ideas that some people thought didn't make sense when we launched them, and now they're ideas that have billions and invested in them, as well as multiple issuers bringing out similar types of products. Areas like mobile payments, like cybersecurity, like junior silver, and many other themes. Space was one of these industries that until recently there weren't a lot of pure play companies, and there weren't many companies with really that focus on space, but realizing how this industry has evolved significantly, somewhat from technological advancements like reusable rockets, which help drive the costs for launch down significantly, as well as other technologies that are reliant upon space-based systems. So think 5G, blockchain, Internet of Things and connected devices, cloud computing. In many cases, these are massive data transfers from point A to point B, and satellites are actually playing a major role, and we call them the digital data toll operators on the digital data superhighway. And so there are many different use cases for space, and there's so much that we're doing. We're seeing increased government spending. We're seeing companies now that the commercialization of space has really just really started up. And this is a theme that we believe is extremely long-term, and it's something that touches almost every single publicly traded company already today.
Okay. Absolutely. And Andrew, let me ask you this too. You alluded to it at the beginning of that response that you've launched a lot of products over your career. Those out there who don't know you as well as I do, which is probably literally all of them. Can you give us a little bit of your background and how you got into the ETF cool entrepreneurial story?
So for starters, I showed up to an interview that I didn't have at a specialist firm called Kellogg Group, and I ended up getting the job out of all the candidates. And I was placed with the largest ETF specialist trading firm on the floor of the American Stock Exchange at the time. Worked my way up, became a lead market maker for new issues for global and international equity ETFs being listed on the ARCA exchange. Was poached by another firm to build out an ETF prop trading desk. gave a bunch of ETF ideas to existing issuers. And eventually they said, why do you keep on giving us your ideas? We've launched them and we've made a bunch of money. Why don't you try launching your own ETF company? So I co-founded a company called Pure Funds, where we sponsored the launch of 10 first-to-market ETFs. And through many trials and tribulations, have done a lot to try to build out a new type of company where we operate our own infrastructure, and we help third parties bring their ETF ideas to market, as well as specializing in a couple other types of financial vehicles and wrappers, even doing some IP and consulting along the way. So have touched many different areas of the ETF world, but being an innovator of product concepts and hopefully delivering themes to investors where maybe it was difficult to get access to, maybe it was difficult to get global exposure to, bringing this instant diversification through thematic investing to many investors around the world.
Yeah, and I love it because it's just like such a gritty story. Like you had a space that you were passionate about, and you were dropping ideas. You weren't making any money. You were just coming up with the ideas because you love them. And then eventually figured out how to turn it into a business. And I mean, I've launched some really cool products. Question out of the chat. Does UFO invest in any SPAC space startups or post-merger SPAC deals, for space companies?
So the underlying index currently at the moment won't add companies that are target companies in the SPAC. However, once that company has actually successfully de-SPAC'd, it can be eligible for consideration. Virgin Galactic was one of the first of those names to actually make it into the index, and now it's, I believe, one of the top 5 holdings of UFO. And actually, just recently, last week, the fund underwent its semi-annual reconstitution, and AST Space Mobile, another company, was just added. Not necessarily a SPAC name, but MDA, a Canadian firm. Many have associated with the other company Maxar.
Okay.
A newly launched company on the NASDAQ has also made it in since this last rebalance last week, or reconstitution.
All right, there we go. Let me just crack my second bubbly of the day here. But all right, what about the LGBT ETF? You mentioned that one at the top. I know that it's not your fund, but you said it was a product that you helped bring to market. What is the symbol there? Where did the idea come from? What does it consist of? How do you decide what to put into that ETF? Definitely an interesting product and one I'm not familiar with.
Over 3 years ago, we were approached by a company now known as LGBTQ Loyalty Holdings that wanted to build a product that they believed that their community could get behind and was supportive of LGBTQ values, and really supportive of those companies that are aligned with this community. And so after working with them for years, what we wanted to do is build something that was truly inclusive and something that we thought that this community could get behind and support. So what it does is it looks at a universe of roughly 500 of the largest U.S. publicly listed companies. There's an ESG.
And is that basically looking at the S&P 500 constituents, or does it go a ton beyond that?
A little bit beyond that.
Okay.
And so then there's an ESG screen that's put on top of that. So several hundred companies are removed. Then with those remaining companies, a survey goes out to over 150,000 LGBTQ plus households across the country. And based on the results that we received from that survey, asking them questions about brand loyalty, companies that they believe are supportive of the community and whatnot, we end up with a universe of 100 companies from this survey that are weighted based on other fundamental metrics. So what we've noticed, though, is the LGBTQ community in the United States is roughly $1 trillion economy on their own. And as a demographic, it's actually one of the most loyal spenders and purchasers of products and brands that they believe are from companies that are supportive with this community. So the hopes are that with this significant amount of money that can be directed to companies that are aligned with this community, hopefully we're able to find some alpha. So really kind of the benchmark for that index is the S&P 500. The fund's been out since last month, but it's something that wasn't just,
so it's brand new.
It is.
It's been out. Okay, there we go. Yeah, see, I was trying to pull up some charts and they looked funky. That's because this thing is brand new. So let's here's a 1 month chart on this, guys.
Yeah, and so for us, it was important to if you want to be inclusive, if you want to represent the community, why not go to the community and get what we think is hopefully some valuable feedback from them about these companies that they believe are aligned with their community. And certainly, this being Pride Month is a phenomenal time to get that word out.
Absolutely. All right. So there you go. And again, we on this show, we really appreciate when funds have awesome ticker symbols. The space fund ticker is UFO. The LGBTQ fund is LGBT. Very well done, sir.
Thank you, Luke.
And can you tell us about anything else? Any new ETFs that are coming out? I don't know if you have anything that's you can leak or you filed for that we can look forward to.
So we're hopefully expanding into Europe via partnerships through some of our other subsidiaries, working with a company, Han ETF, out there. We're certainly at various stages of bringing both concepts of our own as well as helping third parties use our infrastructure to bring their concepts to market as well. We're even looking at a couple different vehicles that I think you and your audience might find pretty exciting that hopefully we'll be able to reconnect on in the not too distant future.
Boom. I like it. Alrighty, sir. Andrew, good catching up with you, man. Like we said at the top, it's been far too long. You gave us the three big things that happened to you over the past 2 years. Whenever we would have had that last lunch in New York before COVID, it was baby, dog, UFO. And we'll all get all right. Throw it out to the chat. Which one of these do you think is the most exciting, guys? Baby, dog, UFO. I mean, we're gonna get a lot of baby votes. But UFO is a good name too. I'm also excited about the baby. But Andrew, man, let's catch up soon. We're all vaccinated. We can go hang out in person again. So let's make it happen.
I look forward to it. Thank you, everyone.
Absolutely. All right, guys. There it is. Always bringing the ideas. Always bringing the good interviews. So far on this show, if you're just joining us, I'll give you a recap. We just talked about ticker ALF. That was the first symbol that we did. We talked about Tesla. That was the second one that we did. We talked about Voyager Digital. That was the third one we did. And then, boom, we've already hit a fourth symbol. We're 30 minutes into this thing. It's ticker UFO, a pure play space ETF. So, all right, guys, those are the tickers that we've had. I want to bring my good friend, my partner in crime, producer AB, onto the stream with me. Producer AB, this is the Trade Idea Show. This is the Power Hour. We promise users there's going to be no better use of their time for finding trade ideas than right here on this show. Air horn for that one. All right, so let's hammer some tickers out of the chat. We're going to do 4 tickers, 4 minutes. All right?
Let's do it. Happy Tuesday, everyone.
4 minutes. They're going to be Torchlight, SSYS, SCR, and AEI.
Ooh.
All right, these are all tickers out of the chat. Let's make it happen, okay?
Where do we start?
I'm gonna throw my screen up on here. Ticker TRCH. That was the first one that was dropped into the chat today. Torchlight.
Ooh. Torch getting torched today.
Torch getting torched today. So here's a 1 month chart, guys. You see the stock went from what 250 to north of 11. Right now we're at $8. Basically, what happened to I guess there's a couple things that happened. We'll talk about the story up and then the story down. So story up, we got clarity on the company's merger with Metamaterials. The company also announced a special dividend. Then we had an offering dropped on us, and then we just had the offering raised, okay? The company's share price appreciated so much that they expanded the offering from $100 million to $250 million. Hugh Henney, our good friend Hugh, is the expert on this stock. He's going to be joining the Power Hour later this week to talk about Torchlight, give us his view of where it's at. He specifically called. He said, my fear with the company is that they're going to drop an offering on investors. They've basically dropped 2 on us over the past week. So rather than us making a call on this one, I do want to talk to Hugh and to get his sense of where he's at. Right now, I'm on the sidelines. I'm not touching it either way. But again, we're doing 4 stocks, 4 minutes, guys, in the chat. If you like Torchlight, drop the 1. If you don't like the stock, drop the 2. If you're just hanging out on the sidelines like me, drop the 3. Please vote one of the 3 ways. Let's have some fun, right? You can be the boring guy. But I mean, I don't know. Let's have some fun with it, okay? So all right, there's the deal with Torchlight. Next one, 4 stocks, 4 minutes, SSYS, another ticker out of the chat. Stratasys. This is the 3D printing stock, right? Yes, it is. Boom. All right, 3D printing company. Producer AB, when did you get into the stock market? How long ago?
I mean, my first investing was like a while ago, probably when I was like 15. But when I really started trading was a couple of years ago.
All right, so you don't remember then, and let's look. This is a 10-year chart I just pulled up with monthly candles. 2012, 2013, the 3D printing stocks were the hottest stocks in the market. Look at that. Look at that.
It was almost
I
it was
mean,
like
they were like EVs are now. There's always something, right?
just gonna
And
say
then
that.
it was 3D printing stocks. Okay. So stock is up today, up 12%, basically on news that another 3D printing stock came out. And they said that they're going to be doing 3D printing for soft tissues. My opinion is sell the news on this one, and I'll give you why. One is it's going to be a while before the deal is realized. It's more of like an intent to do a deal, an intent to get to this. So before this is a significant revenue driver, I would expect that it's going to be literally years. It's a long time to wait. Two, the news wasn't even about Stratasys. It was about another stock, 3D Systems. I believe that's ticker DDD. Let's see. Yes, it is. And look at AB. I'm going to take you back on that. Look how crazy the run-up was in this one. Again, 10 to 100. 3D printing stocks were all the rage many years ago. And so for that reason, if I had to pick one way or another on Stratasys, here's a 2-day chart, I would be on the sell the news side of things. All right. So there's my call. I'm going to drop this one in the chat as well, guys. Again, 1, 2, 3, 4 stocks, 4 minutes. If you like Stratasys right here, hit the 1. If you dislike it, hit the 2. If you don't have an opinion either way, drop the 3 again. Just, do one of the 3. Okay. I'm a 2. I don't like this one right here.
Yeah.
AB, where are you at?
Just from a chart perspective, it looks very akin, the 3D printing boom. It looks very similar to what we saw a few months ago with the EV boom. I got to agree with you, Luke. I'm not really into the 3D printing companies. It's like when we saw that first boom in 2012 or whatever, there was all these potential use cases being thrown out for the 3D printers. I don't think we've seen that materialize. And I'm not at this point with both those stocks up already more than 10% each. The DDD one was up like 25%. I'm not going to get into them after they've already had this big run up.
All right. Next stock on the list, ticker SCR, Score Media and Gaming. Is this a gambling play, AB? Let's look at the
yes.
our trusty Benzinga pro.benzinga.com. Okay, yeah, sports betting products. All right, I don't really know this stock. Do you? I knew the first two. I don't really know this one.
I don't know the stock specifically, but I do know the space. I think we've seen some other gambling companies up today. I know the Round Hill betting ETF BetZ is up today. So I don't know if the sector just had good news or specifically this company. We'll have to go into Benzinga Pro and see.
All right. So I mean, you have the stock up 14%. We just cleared a previous high that was put in on when that had been last Thursday, I believe. We took that high out. I mean, generally speaking, the chart looks okay, not great, right? Again, I don't know the stock. So we're going purely off of the chart. We have sellers at $27.50, and we have sellers at $30. Those are the next two levels that we're going to run into.
Okay, we do have Chris Kajay in the chat saying Sport Media is a leader in Canadian market. Canada voting on sports betting legislation today.
All right, so there's news. So here's my thing. Okay, let's talk about this one again. We're doing our 1, 2, 3. 1 if you like the stock, 2 if you dislike it, 3 if you're on the sideline. Start your voting now for ticker SCR, Score Media and Gaming. 4 stocks, 4 minutes. But okay, there's news. Chris Kajay, Benzinga News Desk coming in with that one. Canada's voting on sports betting legislation today. If you were buying the stock on that news, the time to buy it would have been last week. You have to buy it into the run up into the vote. I don't want to hold the stock when the binary event comes out, right? Unless you think you have some sort of edge as to whether or not this legislation is going to be good or bad, it's going to pass or fail. If you think you have some sort of an edge, go ahead and hold it into the binary event. Otherwise, it's a case of buy the rumor, sell the news, buy it into the vote happening, dump it, and then redecide once you get the information out there. I think I'd be a 2, dislike this one. Let's see where the vote falls. If you wanted to buy it into the vote, the time to do it would have been last week, not today when the vote's actually going to be taking place.
I think a lot of times, Luke, in some of these binary events, as you said, like the vote's either going to be yes or no. Even if it is a yes, sometimes that's kind of priced in and there could still be a sell-off after that news. So yeah, it's definitely a big gamble getting into right now before the news, especially with it up almost 14%.
Yep. All right. And we got a lot of 2s on that one. So, all right, one more. 4 stocks, 4 minutes. Last stock, pulled it out of the chat. Everybody was an early bird, dropped their tickers in early. We are getting to them. Ticker AEI, Allset eHome International. Wild chart. This is a 1-year chart with daily candles. I mean, look at this thing. So we went from what, 6 to 30 to 6 over the course of the past year. Do you know what this company does? I don't, but Benzinga Pro will tell us.
Engaged in property development.
Digital health, digital transformation, and biohealth activities. And what the hell does it do? Let's go to their website. Guys, if you ever need to understand what a company does really quickly, Investor Deck is the way to go. That is like the tip that I will give you.
Or you can just ask me.
Or you can ask Jason. Jason, do you know this stock?
Yeah. Yep.
Okay.
The chairman is Dr. Chen, I believe. Is that right?
Wow. You know who the chairman is? Damn.
Yep. I used to study in Fortune magazine all the CEOs.
Approximate market cap of 19.9 billion. Is that right?
Yeah, it's about right. It's growing though.
About a 48% investment multiple for each investment. Okay.
Yeah, I mean they're good. So how do you know them?
So this is, we're doing 4 stocks, 4 minutes. This is one that was dropped into the chat. I don't know.
Wait,
how do you have an opinion on a stock like this? I mean, this is wild.
But
it looks like it's a holding company.
The Score Media is interesting that Chris Kaji's talking about. I've heard a lot about it. SCOR.
Yeah, so we just did that one. Look at this chart. The stock's up 14% today. There's voting today on legislation in Canada for regarding sports betting. My opinion is, if you're going to buy it on that news, you should have bought it last week. At this point, you got to wait and see how that news comes out.
I should have asked Kevin O'Leary about it. I was talking to him today, and I should have asked if he thinks it's going to go legal.
See, he was somebody who'd have an edge as to whether or not that news. He's a Canadian guy.
And he's involved pretty heavily with a lot of stuff there. I heard you talking about Voyager, so still taking a dip.
Yeah. I mean, the whole crypto market's gotten cracked. We saw Bitcoin run down 10% overnight. Finally getting some buying today.
Yeah, it did look like it was legging up a little bit. We saw Bitcoin come back up to 32,000 after dropping below 30,000 for the first time since January.
Could Voyager get back to 16?
But look at this, Jason. I've got to show. So producer AB went on my computer yesterday,
and then
when I left my computer signed in, he tweeted out what stock/crypto should I buy right now. And we have our good friend Steve Ehrlich, Voyager CEO, said VGX, VGYGF, 200 likes on his response that's the stock to buy.
Well, yeah, I mean, I own it, and you're getting to a price where they have a lot of cash on the balance sheet, lots of cash, and they're making a lot of money. I mean, look at the quarters, right?
Yep.
And your numbers that you had for the last quarter were good. So I wouldn't be, and they do have. Thank you, Mr. Kinia. They do have the ability to do a buyback of shares as well. So that is, that is a positive. Will you pull up Upwork? I don't know what's going on with Upwork.
And producer AB, could you load that one up on your screen?
Holy cow! Why am I up? No wonder my account's up today. What is going on?
There we go. First air horn of your day, Jason. Boom.
Wow. Okay. What happened with Upwork? Bring it.
And if you guys don't know Upwork, this is a Jason Raznick early pandemic play. Like let's just go to a year. He's talked about the stock for more than a year. But if we look at just the past year, look at that run, 12 to 54. This was like his high conviction stock.
Yeah,
all on this show have our high conviction stocks. I said call them, they work.
I said I took a second mortgage out of my house to buy Upwork. I didn't really take out a second mortgage, but it was one of those high convictions. So look at that, producer AB. 12. I think Luke's going off there now. So 12 to 53. But what was the news? Take me the news, producer AB.
Let's take a look. Let's go straight to the BZ Wire. And Zinger Nation, if you want me to get on Luke's Twitter more and tweet out challenges as Zinger Nation, smash the like, subscribe to the channel. Let me know in the comments
will you zoom in on the Upwork one?
On the news? Yep. That work? Can you see that? So Upwork reports new brand partnership program, Upwork collab. Did we write that? Okay. Let's see. Yep, this is from the BZ Wire. Looks like
How
it's
do you
just
know?
a press release. It says right here on the.
So what's this collab?
It's with Budweiser. Upwork invites creative directors to apply. Here, I got to zoom out a little bit to read it. Oh, here we go. The world's work marketplace, Budweiser, today announced a partnership to champion America's diverse workforce by tapping into the country's extraordinary creative freelancers to reimagine the design of limited edition Labor Day can packaging. So it sounds like people are going to be able to, through Upwork, submit their own designs for a limited edition Labor Day can for Budweiser.
There must be more. I mean, come on.
The partnership marks the launch of Upwork Collab, so the whole thing launches the Upwork Collab, a new Upwork brand partnership program. So it will allow companies to use Upwork to, collab on new brand deals. That sounds pretty cool to me, Jason.
Okay, collab. All right, that's okay. So that's what's below that. Anything else?
Looks like just a quote from the SVP of marketing. He says, "We're thrilled to kick off our new brand partnership program." This one's from yesterday. Yeah, it looks like this is the only news we have on it this week.
Okay, all right, that's good. So now I'd like to see Voyager have that kind of move today.
Yeah, let's pull up Voyager real quick.
I'd like to see Voyager.
Voyager.
Wait, hold on. That Budweiser thing is that from May 20th? Did you really not look at the date?
Let's go back and see.
If that's the case, you make me look silly.
Oh, it was from May 20th. Why didn't you
look at the date, man?
We have nothing because I thought we put something out on the wire every day for Upwork. That was my bad, Zinger Nations. Okay, so here, let's go. Press releases. No, nothing. Why is it up 10%?
Wait, I saw June. What's the June thing?
This is from June 10th.
All right, so now I'm going to the news desk Slack. I mean, hey, Zinger Nation out there, thank you for correcting Aaron Bree.
Yeah, sorry about that, Zinger Nation. I'm not trying to give anyone fake news out here, so.
Okay.
I looked at the one below it and saw that was Monday, so figured that was yesterday. But yeah, next time I will.
Does anyone know why Upwork's up 10%? I mean, we can call the company. We know the company. I just went to the Slack. Oh, go to Fiverr. FVRR.
Fiverr. Okay, so
Fiverr's up what? Scroll up. Come on, man.
Fiverr's only up 1%.
Only up 1%.
$2.
Okay. I don't know.
Let's see.
Any insider trades on Upwork? Do you see any SEC filings? Go to the Upwork page if you see any SEC filings.
Hold on, it might be from this company. Splunk's up 10%. Why shares of Splunk are okay? All right, let's go back to Upwork, see if we have any SEC filings. Nope, nothing since June 3rd.
Okay, well, we got to figure this out. Article on Motley Fool. Is that what you're thinking? Is it a NCAL? Is it a buy? A Motley Fool. Okay. On our show. So if you have it, paste the link. We're trying to figure out Upwork is a 10% gainer. It might be a Motley Fool buy. It would be good to know. We want to know what's moving Upwork today. That's 10%, one of my bigger holdings. Thank you for alerting us, Bill Big D. And what were other stocks you were talking about, Bree?
Yeah, and thank you, George, too, for correcting us on that date. May, that was May, not June. Other stocks we've been looking at today. So I was going to pull up Voyager real quick just to see if Voyager has gotten a boost from Oh yeah, it's gotten the little same leg back up after Bitcoin jumped back up to 32,000. Other stocks I'm looking at. Let's check back.
Yeah, I don't think the Voyager rally is over. I think just like with Coinbase and these other ones, I do think you will see increase there. I do think you'll see an increase with crypto, and then it may just flatten out, but I still think you're going to see some more positive momentum on crypto. I know I'm biased, I own it, but I'm just telling you, I don't think it's over.
Well, yeah, honestly, Jason, I was surprised to see Bitcoin kind of jump back up today. I thought we were going to continue to see more hurt in Bitcoin, more pain in the crypto space. But if it can get some legs back up, then we could be looking at, let's see what Bitcoin's at right now. Bitcoin.
All that has to happen is like another place announces they're going to take Bitcoin and that kind of thing. So, go ahead, I'm listening.
So another stock that I was looking at was Global Star. Let me find the ticker's not popping up for it. Jeez, Global Star, here it is, up 16% today.
Upwork CEO was on Closing Bell yesterday.
Oh, so it was a little CNBC bump.
Yeah.
So yesterday we did an article on. So yesterday Global Star was up. Can we pull up the
Scott BDGE? Go. I mean, there's no follow button, but thank you, man. Yeah, that's we need that story. You know, like we missed that. Yeah, we need that story on Benzinga. That's I apologize to every Benzinga Pro user that we missed that story. That he was on. The CEO Hayden Brown is on Closing Bell to discuss the increased demand for freelancers as the pandemic has allowed more flexible work environments. So sorry we missed that story, and we're gonna cover it now. I just sent it to Jason Shubnell, who's gonna fix this. Make sure we got the story. Thank you. Okay, go ahead, Bree.
I was just going through some other tickers I was looking at Apple today, going down on the wire here, seeing what's moving. See, Jason, this is what I'm used to when I look at the Benzinga wire on Benzinga Pro. Look at me. We have like 10 headlines today on Apple.
I know, but you guys always look at the dates. I mean, I'm always looking at the dates and times. Always.
Let's see. Yeah. So it looks like we just have some unusual options activity, some call sweeps coming in. Yeah, I mean, I think Apple's interesting at this current price. It's kind of been a dog for the past 6 months. But, I mean, Apple's always a strong company. I don't know your thoughts on it, Jason.
I just own it for long term. I don't touch it. Will you pull up SPCE?
SPCE. That's Virgin Galactic Holdings.
Yeah, it's moving up 8%. How's the volume?
Volume is looking good. I mean, it's better than yesterday already and the day before. But nothing like we saw this huge spike in volume back here on May 24th. So we'll see if we get that volume coming back in.
Okay.
Space ticker SPSC was at a high of $62 back in February. We're only at $39 right now. So maybe we will see that inch back up closer to that all-time high of $62.
And then check out one called ARDX.
ARDX. I don't think I know this one. Ardalex. Sounds like a biotech company. Let's see what it is.
This person just wrote that, so I was just checking that.
Let's see. Yep, it's a biotech company focused on the discovery, development, commercialization of molecule and polymeric therapeutics to beat the gastrointestinal tract. Okay, so interesting. Maybe we'll have to get Zoltan to reach out to the company to have them on to understand what they're doing.
Okay, and then CrowdStrike's at its high of the day.
CrowdStrike, ticker CRWD, CrowdStrike. Wow, $254. Yeah, that chart looks strong to me, Jason.
Yeah, security. I mean, these things when you see the support there, you can see this hitting 300. Security strong. Any news on it? Do we scroll down?
Let's go to overview. Scroll down. We're on the BZ wire. 17 analyst rankings.
Yeah, I mean, it had upgrades.
So wait, this is a cybersecurity. Yep. You know what other cybersecurity stock I've been looking at, Jason, is one that our good buddy Tom Nash told me about, Fortinet. And if you look at just the year chart on this, it looks so strong. It's just like a direct 45-degree angle up. And I don't know what, if anything, will stop it from moving up. I mean, the cybersecurity space seems so hot right now.
Can you reach out to Upwork, Hayden Brown, their PR, to come on the show?
Yeah, let's do it.
Upwork CEO He's on Twitter as well, Hayden Brown. He only has 8 followers. Keeping the account active. Yeah. So, So let's reach out to the Upwork CEO. I'm reading a quote that I'm ultra long Upwork. A big part of my thesis is built on the CEO. Her interview into the Hayden Brown. Is that Hayden? Is a girl's name, not a boy's name. Let's see. Here we go. It's a girl's name. Yep, female's name. So here it is. I found it, guys. I got it. Got the video. So you guys are wondering why Upwork is up. This is it. Hayden Brown killing it. Okay. Yeah, look at the price target upgrade to 300 on CrowdStrike.
We're getting a note from Jason Shubnell from the news desk saying that Brent from the news desk says the Upwork move looks very technical. So maybe the CNBC bump, in addition to some strong technicals, has helped Upwork come up, but we will continue to work on that, see what the news is behind the scenes. Then yeah, we will.
It may be technical, but the catalyst was her interview. I mean, go to Upwork's chart.
I just can't believe that we don't have anything in the wire back till May.
Give me a 1 day on it, because we don't cover every stock every day. Apple's is a high thing, so it started up a little bit, and then it really took a launching point around 10:30 when maybe the interview got spread around. Yeah. So
yeah, it went all the way up to 55.
We'll have a story on Upwork out there soon. We'll have a story on Upwork soon with the interview. So if you type in UPWK on Benzinga, they're probably at 20 minutes. There'll be a story up there. We missed it. It happens. Let us know if you see us miss stories. Write an email to editorial@benzinga.com. When the CEO of AOL, listen, this is funny. This is from, hold on. Where's my mouse? Okay. When the CEO of AOF said, "I may get whacked for telling," when asked if there is any exciting news, how do you not buy? What an AOF went up a lot, right?
Yeah, that was great. That was like the first time he came on, he alluded to the Uber Lyft deal without being able to talk about it, but you could tell he was like dying to share something, but he didn't. And then the next time he came on was after they announced the deal. And yeah, that should have been a sign for all of us to buy. So yeah, if you missed out on that one, subscribe to the channel.
Well, what's it up now? What's AOLF up?
It was up like 60% on the day last time I checked. Let's check. 77% on the day right now.
From our interview?
Well, he was on a couple days or last week, but this was on news that we broke this morning that the company was announcing a $2 million buyback.
All right. So you guys got your Benzinga Pro paid for if you're watching us in real time. I mean, we have it in red, so we have it in red exclusive. So look, we got it out at 8:26. Go to the chart. Let me see. Go to the chart.
Go to the chart. 8:20.
Right, where's 8:20? Yeah. So you would have made 60% of your money.
Right here is when we broke that story. That big green candle right there.
Wow. Wow.
Yeah, and if you held on, then you had another like 50% of gains right there.
What's the market cap on this thing?
Market cap is small. I believe it's about. We don't have it listed right here, but let me check.
It was 2 point. What's the price of it right now? What's the price?
The share price is $13.67.
Oh, 13.7. It was $2.93 when Benzinga did the interview.
Yep.
So it went from $2.93 to $13.57. Like we should write an article about how when we did the interview, what it was at and what's it at now. What's the market cap?
The market cap is
170 million. Float
170 million.
Float's small. I love Happy Muhammad. I love all of Zinger Nation. You guys are awesome. Thank you, guys. I mean, this is an interview with the CEO, and it moved the market 70%. Spencer Israel made a lot of money today for sure.
Yeah, Mike Wisdom in the chat was saying that he got in while we had the CEO on the company. Mike, if you want to drop the details of the trade in the chat, we'd love to hear that.
We love it. I'm joking. Spencer Israel didn't make the trade on it. I just see him in the studio, so I'm just joking. Yeah, and Kel, we need to keep the tracks of the stocks we covered. If you'd like to send us a testimonial, Mike, and we could use in our testimonial page, send an email to powerhour@benzinga.com. Feel free to send an email to E-Trade and say, look, they broke the story on this stock. and had the CO on, and it's what's a symbol again? I forgot.
ALF.
ALF. Okay. Wow. You guys, I didn't get any of it, so you guys can make a lot more than me. I didn't do any of it, and that's good. Whatever. But let E-Trade know they should add Benzinga News. Okay, or Robinhood, and they should have more of it. And then send us an email to powerhour@benzinga.com with a screenshot, and we'll send you swag. Even though we made you millions of dollars today. I mean, look at that move. Look at that move. All right, I have to hand off to Spencer. I got to go do an Ernst & Young interview.
All right, you're hopping
Entrepreneur of the Year.
Jason.
You can slowly move out. You don't have to move out yet. I'll be there in like 10 minutes. I got to read my application first.
Chat out there.
I need a Diet Mountain Dew, and I go into the next door, and all they have is regular Mountain Dews. Why don't they have Diet Mountain Dews? I don't get it.
We can get that figured out. We'll get you a Diet Mountain Dew. But chat, let me know what tickers you're looking at right now. I want to look at some more tickers. I want some more trade ideas. Love you, Jason. Thank you for joining. Let me bring my main man Spencer on too. Spencer?
What's up? What's up? What's up? How we doing?
Good. It's been about 3 hours since you were on the stream last, so that's a long time for you.
Some days, some days it is, some days it isn't. So Neil Hamilton is usually on at 1 o'clock, and he had a thing. So no get technical today. I guess I could do my best Neil impression, though I wouldn't even know where to begin, honestly.
Neil was having some stomach problems, so if you guys want to send him something, maybe some. He likes those little ginger chews.
Wait a minute. Stop. Didn't you guys go out to dinner last night?
Yes, we did. And I feel fine.
What did you do to him? Did you like spit in his food or something?
No, come on, Spence. I wouldn't do that. I thought it was really weird because he ordered like a chicken breast, but ordered it medium rare. And I'd never heard of anyone ordering chicken.
Stop. He did not.
Yeah, he said he's trying to like eat more like what's it called? A paleo diet, like when people do like the caveman type stuff.
Oh my God. Yeah, I bet he's sick today. Jeez, what an idiot. Chicken medium rare? I've never heard of that before.
Yeah.
Right. Long salmonella, I guess, in the Hamilton household today. Geez. All right. Well, so I was just going through the market. There's a lot going on today, Aaron. The stay-at-home trade is was on.
Dead or alive?
At the open it was on. Like
now it's dead.
No, like here, let me pull my Benzinga Pro. Let me go to like here. This is the tool I want to have up. Yes, I heard you guys talking about the 3D printing stocks because Triple D had news and it was moving SSYS with it. Upwork, I heard you guys talking about, but like Teladoc was up today. Let's go to some charts, right? No, let's go here. Actually, make it. Teladoc was up at the open, right? Wasn't it? Or it's up now. DocuSign was up at the open. Roku's been strong all day, and Netflix for that matter. Both been really strong all day. Not really sure why. I know Netflix had the thing with Spielberg. That was like yesterday though. Stay-at-home trade's been on. Like,
man, Roku's gotten all the way up to almost $500.
Yeah, I mean the Nasdaq's at all-time highs here.
No, I'm saying like earlier back in March, Roku was up at 5. I don't know like what fair price for Roku. Because I mean, look, Roku's gonna keep being in like every new smart TV that's bought. But at the end of the day, like you would think this is all priced in, right, Spencer?
I don't know. A few people asking where's Neil. You just missed it. Neil had some medium rare chicken last night, apparently, so he's not feeling great. Is what Aaron Bree says. I don't know if we believe Aaron Bree. Maybe we do. Maybe we don't. But with regards to Roku, I mean it's off its highs though, right? It was well off its highs. This thing went from how high to get 480, almost 480, and it got down to below. It was 272, right? It came back a long way. So it's come back a long way from that decline. So I don't know what's priced in and what isn't.
I would just love to hear like the bull thesis at this point for Roku at the price it's at. And I guess the bear thesis
Oh,
as well.
the bull thesis is that they're continuing to get the Rokus into TVs, right? They've essentially been. I'm trying to think of another player out there, another company that successfully has done what Roku's done, in that they essentially just got their hardware into all these TVs, and then they talked about the Roku channel a couple of weeks ago. There was a headline about that, but I mean, they're competing with Amazon and Apple, and they deserve props for that because not many companies can really hang.
Right. It's almost like a thing behind the thing play. Like you could buy Netflix, or you could buy the thing that's powering Netflix's streaming service. You know, like I would wonder the like percentages of people that go to watch Netflix on a smart TV, how much of that, or whatever app you're going to use, whether it be Hulu, Netflix, like what percentage of that is being done through Roku as opposed to Amazon's Fire TV or whatever it is. You know, I mean, it's like Roku's almost become synonymous with streaming services. So
somebody asked if they're profitable. Yeah, they're profitable. They have earnings. Look right there in on the calendar in Pro, and they're growing. They've got real revenue.
That would be my one concern at this price is, are they going to be able to grow like for the next year at the rate that they have? Because think about it. Whoever was going to buy a TV to stream stuff probably already did it in the last year with COVID while they were locked down. So maybe people will be spending their money in other ways other than buying new smart TVs, but who knows?
Maybe. Let me zoom in here. So I've got my scanner tool up on the left hand side, and news feed up on the right. Let's just go back and look at. I have the scanner tool. I have it sorted by percent change from the open. Right. I really, once the day starts, I'm only really interested in how stocks behave relative to the open. One, because I have an idea of what they did overnight already from pre-market prep, but also, you know, if you measure a stock's movement based on the previous close, it doesn't really tell me. It doesn't tell you as much. If I see a stock's up 10%, you know, from yesterday's close, does that mean it was up 10% after hours, and it's now down for the last 6 hours, or vice versa? I like looking at overnight change in the pre-market, and then once we hit 9:30, I like to look at the change from the open. So that's what we're doing here. On the top, we have gainers, and the bottom we have losers. You can see what's up, what's down from the open. I mentioned the 3D printing stocks. Why is space so strong today? I know. Luke was talking to Andrew Channon.
Well, we do have a congressional hearing, or not congressional hearing, but the Pentagon is set to release some information regarding like UFOs and aliens. So maybe just people are a little bit interested in what's going to happen there.
And what are they going to say, that UFOs or aliens are real? I mean, no, of course not.
Well, okay, Spencer, I think personally they're going to put out like, you know, a tenth, like 10% of what they actually have, just to like give the public some like, oh yeah, we do have this, you know, paper from, 20 years ago or whatever. But we'll see.
Something else that caught my attention was Torchlight. This has been a high flyer the past few days. Nothing can go straight up every day. So it's come off hard today, down 16%. You can see it right there. If I have learned one thing this year, I have learned that I guess it pays to hodl. I mean, this is the kind of thing that prior to this year, this would have been like the end of the Torchlight move, right? You could have looked at this chart and said, all right, move's over, right? But now, who the hell knows? So if I was long it, which I'm not, if I was, I would have probably sold already. And if by some miracle I didn't, I would have stop losses set at, call it every 20%, somewhere around there, right? From the high, right? So we're down 17% today. I would have a stop loss set at around, what is that? Around like $8, and then every 20% lower. And that's how I'd protect myself. But if you're trading this thing, let me know in chat. I'm really curious. These things are super, super hard to trade. I think. So.
Yeah, I mean, Torchlight's getting torched today, as I said earlier. I don't know. I think a lot of the attention that was on Torchlight might go other places because it's already seen the run, but who knows?
Yep. Seeing, let's see, CTXR is being punished today. Sidious, they had some news, right? I think they had some news. Yeah, we covered it this morning in the biotech pulse. QURE, same story. Unicure, they had some news. What else? What else is down today? What else is really down from the open? No big names stick out to me. Nothing really sticks out to me. Oh, Solar. Yeah, I saw JKS. Jinko Solar. Actually, all of Solar, I think, is down. Let's go to a chart. We can look at JKS. Yeah, down 9% today. Look at FSLR. Down a little bit. CSIQ. Up. Down. So all of Solar is down today, or at least the biggest Solar names are down today. Johnny wants to look at Sundial. Okay. What do you, Johnny Black, what do you want to know about Sundial? See, this is a great example in I guess the holding doesn't always work, as Sundial shows. This is a great lesson in setting trailing stops, right? Or not trailing, in setting stop losses, right, on the way down. You can hold this thing and just hope it goes back to 2 or 3 or 4 or whatever. But more often than not, historically, these moves are short-lived. GameStop is an exception. AMC is an exception. A lot of these things this year have been exceptions to the rule. But by and large, you get these big moves, they come back down, and that's the end of the story. And Sundial looks to be that. Now, I could end up being wrong. It could go back to 2, but I obviously have no idea. But this is why, if I was in this, I would set stop losses and I would have been out, long ago. I would not be holding at 88 cents. But Johnny, I'm curious what you.
Johnny's saying he loves weed, but he doesn't buy weed stocks.
Oh, you know what? Weed stocks are a little bit out of favor right now. Look at the MJ. You look at the MSOS, which is the one that I prefer. A little bit out of favor. I honestly be inclined to buy the dip on weed stocks here if I didn't already own them, and I wasn't comfortable with my position size, which I am. But like for a trade, I could definitely be talking to buying the dip in weed stocks, because look what just happened today. Didn't Connecticut officially legalize marijuana today? I think they did. Or maybe
I'm not sure. I would imagine I guess Connecticut's probably not that big of a market, but I'd imagine if they did that, we'd be seeing some green in this ETF. No pun intended.
Wait, well, Happy says he learned the hard way when Canada legalized marijuana. That's why he doesn't buy weed stocks. Well, what stocks are you talking about? Like Tilray? Talking about like Canada here. Let's zoom out. We're talking about like what, like CGC? Like, yeah, these are the largest ones that all trade up into that event. What was it, like 2018 or whatever? That legalization happened. But like, there are other types of companies out there. These are all Canadian. The largest ones that Canopy, Kronos, Tilray. These are all Canadian companies. I have a bias towards the U.S. Somebody asked, Johnny Black asked, what is that ETF? MSOS. It's an ETF that more or less gives you exposure to the largest United States cannabis companies, right? The ones that are selling in the U.S., which is a far larger market. I've said time and time again, I'm inherently bullish on this theme. So it's off its highs. I bought all these stocks last year. I bought the 4 largest holdings in this thing last year, and I intend to hodl for the time being. What else? Yeah, USA all the way. That's exactly right. Let's go back to the scanner tool. We do have, FYI, a Jerome Powell testimony here in about 45 minutes.
Oh yeah.
That should be
Should we buy some spy calls right before he speaks?
No, because he's going to be talking about like just the Fed's reaction to here's the page. It's lesson learned, the Federal Reserve's response to the pandemic. So I don't know if we'll say anything too interesting, but we're going to be streaming it anyway right here on our YouTube channel if you want to watch it. If not, if you don't want to watch it, we've got the crypto show at 2, the Biotech Buzz at 2:30. We got that going at the same time. But God, what is going on with Triple D here? Like, has it stopped going up yet? DDD? That's not it. DDD? Wait. There we go. Why won't you work for me? And then at some point before 2 o'clock, I do want to replay part of this morning's pre-market prep if I can.
Yeah.
Because if you missed it, God, look at 3D. This thing is such a mover. Look at this thing. Got to for some ridiculous reason, it decided to go to $50 in January. The thing has been a dog for years. Look at this thing. Dog for years. For some reason, it went to 50. No idea why.
Interesting.
And now we're coming up again. Weird. So anyway, I do want to replay in a little bit here, a few minutes. I want to replay the interview that we did on pre-market prep this morning with Dave Lauer. One, because I wanted to hear it again for myself. And 2, because I wanted people who weren't watching to be able to hear it. Dave Lauer has been a market structure consultant, expert for basically his entire career. He's an old friend of Dennis Dix, and he came on our show years ago, and him and Dennis have testified together in front of Congress on market structure issues, and they had a really great conversation. Some things they agree about, some things they don't agree about market structure, payment for order flow, naked short selling, the whole thing. And it was a little bit of a complicated conversation, but I want to replay it, and I would like to just talk about it as basically do like a live reaction to it. So I'll do that in a little bit here. It's about a 25-minute interview. I just want to get that done. I want to give myself enough time to do that. But let's just for the moment here keep an eye on what's up and what's down. Yeah, Miles says it was a good interview. Thank you, Miles. I agree, but I'll be honest with you, a lot of it was over my head, which is why I want to listen to it again or watch it again. All right, so I just refreshed my Pro, and then I had a lot of changes that didn't get saved, which is a little irritating. But whatever.
What else are you looking at today, Spencer? The 3D printers, the weed stocks.
What else am I looking at? Well, Netflix. I mentioned Netflix is strong. Don't really know why. Netflix and Roku, which we discussed already. I mean, tech is strong. Amazon isn't. Let's look at that Amazon chart. Amazon's interesting.
Let me get that pulled up real quick. I mean, we got Prime Day going on, so maybe do we have numbers from Prime Day yet?
They don't typically release numbers for Prime Day. They were estimates, but they don't.
Look at how long Amazon's been trading in this range for about almost a year. So last July, last August, we had it a few dollars higher than it is now, and it's basically been trading sideways for a whole year. I don't know. That's pretty interesting to me. I mean, I guess on the good side, it's been able to hold its levels throughout the past 10 months. The downside is we haven't seen much growth in the stock over the last year. But who knows? Sometimes when you see a chart trading sideways like that for that long of a time, then it means it's about to take off. So I don't know.
The longer it stays bunched up, the more likely. Let me say, the longer it stays bunched up, the greater the magnitude of the move when it comes out of that range. So if it breaks higher, it'll blast off, and it breaks lower, it'll fall to the floor. Like, for example, this Bitcoin chart's a good example, right?
I don't think we're going to see Amazon fall to the floor. That's just me.
Well, actually, this Bitcoin chart's not a great example, but you can see it was in this little range here for a little bit, and it fell through the floor today. So today is kind of the first day of that shakeout. But the longer a chart consolidates, in this case, it's been range bound for all right. Tesla's a great example, and the chart's messy because of the split. But you can see let me see if I can zoom out. This thing was range bound for years, right? And again, the split kind of screws it up because it doesn't look like it moved a lot, but it was basically pre-split, if memory serves. Tesla was between like 250 and 500. It would go back and forth. It'd go to 250, and it'd go to 500. It'd go to 250, and it did that for years. And then it finally broke out. And then they did the split, but then it broke out and it went to the moon, right? So the longer a stock consolidates, the greater the magnitude, I think, of the move, whether the move is higher or the move is lower. In this case, we've been in a range for about a year. So my point is, if Amazon at this point it's at the top, it's at the ceiling of the range, right? It's right there. What's the all-time high? 352. 52 and a quarter, right? Yeah.
Around maybe 359.
359. You say, okay. Well, regardless, we're not far off, clearly, right? So if we were to get to 3560, 3570, then like blast off mode to the moon in Amazon is what I'm saying. Mike Wisdom says the power hour at.
That's weird. I'm responding to it right
Mike
now.
Wisdom, just do this, Mike Wisdom. Just email. Let me put it up on the screen. Yeah, just email shows@benzinga.com. Just do that. It's up on the screen and in chat. Would it comment on Neo? Yeah. Well, let's do Neo, and then let me play this interview with Dave Lauer. Gosh.
Yeah, Alf is up even more from last time we talked about it, up 90%. Johnny in the chat saying he hasn't gotten his hat yet. If you were selected as one of the top 10 to get the Alf hat, they are on it. They are sending it. Just give them a couple days. That was just last week, so sometimes it takes a few days for stuff to go through shipment. Yeah, I mean, that's a crazy move we've had on Alf today.
Wait, and this is all because of the buyback? Is that right?
I believe it's a multitude. It's like one of those things, like the buyback might have initiated the initial jump, but there's also like a big short float. So maybe this is just pure speculation, but maybe shorts had to get in there and start covering. But yeah, I mean, it's getting some legs right now.
Wait, what's the market cap of Alf? It's not big, right?
170 million.
Yeah, so it's not big.
And the short float is about like 20 million, I believe. 16 maybe.
Wait, that's how many shares are sold short? How many? But what percent of that of the float is that? We have in Pro that their total shares outstanding is 12 million. So you're saying they have 20 million shares marked short.
16, I believe someone was saying in the chat earlier. And again, I'm not sure. This is just what people are throwing out in the chat. So, and if anyone out there knows the exact numbers, correct me if I'm wrong. But yeah, I mean, he did spill a lot of news on the Benzinga interview. The first time we had him on a couple weeks ago, he actually alluded to having some news that he wasn't able to share yet. So for many people watching, that might have been an indicator to buy. And if you did, you've got some good returns.
Jesus. All right. Maybe CEOs. I mean, it's great for us, but maybe CEOs shouldn't do that kind of stuff. Just my 2 cents. All right. Let's just do Neo real fast. Someone asked us about Neo. What is there to say about Neo? Honestly, I'm who asked us about this? Was it Let me just make sure I got the name right. I lost it in chat. Somebody asked us about Neo. Whoever asked us about Neo, what was your cost basis?
Here's the comment.
Thank you. Yeah, what's your cost basis? Are you up or are you down? I'm just curious. I have no position. AB, what about you?
I actually have some Neo in my like long-term portfolio, my Roth IRA.
Really?
I do, yeah. It's not like a huge position in it, but I have a few shares, maybe like 3 or 4. And my thesis behind that is just more so like, well, if Neo does take off and gets a strong footing in the Chinese EV space, then it could be a monster of a company 5-10 years down the road. So it's not one that I like actively trade or anything, but it's just sitting in there. I don't think it's. I don't know what I bought it at. Maybe around $50. Maybe I'm down a little bit, but yeah, I just wanted to get my bases covered for in the Chinese EV space.
Yeah, I mean, if there's a Chinese EV stock to own, this is probably, there are probably only a couple that are going to. I mean, and this is the most well capitalized. This is probably, if you have to think, this is probably going to be the winner or one of the winners of EVs in China. I know, like, some people believe that China can they'll never let this company fail. You're right. This is essentially they're catering to the luxury market a little bit, right? The high end of the market, but China, the government will not let the company fail. And if you're of the belief that, the cream will rise to the top and that the largest companies are more likely to succeed, this is already the largest company by market cap in EV company in China. Oh,
Habtalem, he's saying he already made $5K on Neo and sold it this morning. If he sold it this morning, why are you asking us about it?
Well, nice trade. Well, I guess it depends. Was it originally meant to be an investment and you just decided, screw it, take my money and run? Either way, nice trade. Very nice trade.
And Andre, I agree that it might seem a little over.
Yeah, I do want to play this interview that we did today with Dave Lauer, and I'm gonna pause it throughout. I'm gonna react to it. I'm gonna do one of those reaction things whenever I feel like it. But this is our interview this morning with Dave Lauer on pre-market prep. He's the CEO of Irvin AI. Let's see. Let me know if you can hear this or if you can't hear it. Either way. Our in another life was a high frequency trader. Now he runs Irvin AI, and he's joining us now on the show. Dave, welcome. Long time no speak. How are we doing?
I'm good. Thanks for having me on, guys.
Thanks for coming on. We appreciate it. You're on our show before you made it big time.
That's right.
now you're too big time for us.
CNBC, that's a big time, right?
No, that's good. That's not what I was referring to. I was
the following. You got the huge following.
You're like hero.
These apes. The apes like you. I think.
I love them, man.
Are you part ape?
I'm part ape. I've got to be.
Starting to grow the beard here.
Yeah, that's right. They call me the silverback, so I'll take it.
Let's just start here. Like, what do you make of the movement?
I find it fascinating. I really do. First of all, I have never seen this kind of popular interest in not just markets, but market structure. They actually care. People want to learn more about it. Yeah. They want to understand what the rules are, how things work. That's the only reason that they're interested in me, right? That's all. I mean, there's not much. There's not much.
You're an interesting person. Don't sell yourself short here, Dave.
I mean, I've been talking about market structure for a while, and nothing has come like this. So, I found Reddit. I started going on there. I did an AMA with them, and that was it. I've been engaged in the community and helping them. Just sort of correcting misinformation where I see it, trying to bring more information to them so they can make more informed decisions. And I think it's a really fascinating phenomenon. I think that they really do care and they're learning more. And I think there are lots of market structure changes a lot of people want to see. I know there's a lot that we agree on. And this strikes me as actually an opportunity for that, because when the public cares, the regulators tend to pay attention.
I think you're making a great point there. And I mean, Dave, you've been on our show. You've come on the last 10 years. I've talked to you for 10 years about this kind of stuff. And like you said, nobody's really interested. The eyes start glazing over when we start talking market structure. They're like, get back to stocks. I don't understand all this market plumbing. I don't want to own this market plumbing. But all of a sudden, hey, market structure is cool. We need like
It's
that
cool
shirt that says
again.
market structure is cool.
Yeah,
So,
it's
so
great.
tell us how, obviously, you've told some of our fans, when we were starting the show 7 years ago, but kind of sum up, what are your thoughts here? Obviously, we got the Reddit movement, but how can we improve, what we're seeing with all this off-exchange market making, payment for order flow? What are your thoughts?
I mean, I've said for a long time that I think a rule similar to the Canadian dark pool rules would be a very effective one, a very simple one. I tend to prefer simple fixes, not incredibly complex ones. The trade at rule that was part of the nickel pilot, that was a crazy complicated rule.
I just want to add real fast. If you are interested at all in dark pools, there's a pretty good book about this. It's called Dark Pools. It's by Scott Patterson. I haven't read the whole thing, but I've read snippets, and I reckon it's a little bit dense at times, but I do recommend the book Dark Pools if you want to learn all about this stuff, because it's pretty interesting.
With all these exceptions in it, right? And in Canada, it's so simple. You want to trade off exchange, you got to give material price improvement. That's it, right? A full tick if the spread's more than a tick wide, or half a tick if not. It's a very elegant rule. I've talked to Canadian regulators, and they even say, we're often asked, how do we measure the success of this rule? Is it improving execution quality, that kind of thing? They're like, we don't even care about that. All we care about is what's the percentage of off-exchange trading. It is our policy goal to keep that lower and to keep trading on exchange. And that should be the policy goal of the SEC. And when you make it the goal, it suddenly becomes relatively easy to make those kinds of changes. So, in terms of off-exchange trading, I think that's the easiest solution.
Why, and I'm going to throw this to you, why is off-exchange trading necessarily at certain levels bad for the markets?
So, and I know you agree with this, Dennis, but
I do.
What you have in U.S. markets is you have lit exchanges, and on the lit exchange, you establish the national best bid and offer, the NBBO. And that's where you have price discovery. That's the definition of price discovery. That's what it is. It's where is the NBBO, and then as that NBBO is changing, where are things trading within it? And so the purpose of markets, twofold, right? Capital formation, price discovery. And price discovery is really what is happening on secondary markets. And so when you start taking all this trading off exchange, and all of the profitable trading, right? It's happening everywhere. It's not just retail internalization. It's broker-owned dark pools and other types of, ELP providers within broker order routing algorithms. It's everywhere. They're segmenting and siphoning off order flow at every possible opportunity, so that only the order flow that nobody wants to trade against makes it to the exchange, which makes it really difficult to make markets on exchange. I want market makers to make money, right? I want market makers to be profitable, and I want open competition for order flow. Those two things should be like, apple pie and meat and potatoes. Like, how can people disagree with those things in terms of what we have as a goal for a market? But when market makers aren't making money, and they widen their spreads, and the trading that's happening off exchange always has to happen within the spread. And so let's say I'm a market maker, right? And something's being bid 10 by 11, and I come in and I want to improve that to 1050. I want to add a bid in there at 1050. I put my bid up. I take the risk in the lit market, and suddenly I see all these off exchange prints start happening at 1050. Or 1050, 10.50001 with like de minimis price improvement, and it's the internalizers free riding off my lit quote, and that's a disincentive for me to post that bid and take that risk because they're queue jumping.
Yeah, well, that's what it is, and and we've talked about this for a while too, and we've done a couple studies with the CFA Institute on this as well. I did one back in 2016, which got zero media attention because nobody understood it, but we went through it, me and Svi Rosov for a long time, and we were looking at when were these executions? So let's just say 40% of the market, was off exchange, and it's grown. I mean, now where are we? We're approaching 50 in some
Almost
cases,
50, yeah.
but we were
and
like 37, 38 when we did that study. But what we kind of found is exactly what you were saying, is like the lit quote was getting executed only when it was getting picked off. So we found,
Exactly.
that
Yeah.
there, even though, yeah, it was still 60% was going, you'd see, the trade, the stock, and we looked at a lot of penny spread stocks where the stock was trading in between the penny, and it's all you're seeing finner on the tape, finner on the tape, finner on the tape. And then all of a sudden, the quote, dynamics get a little bit weighted to one side,
Yep.
quote rolls over, and they pick off everybody on the bid. So, okay, well,
Exactly.
there goes that's your 60% volume that all hit in one shot. So what we found was that the lit quote was only getting executed when it was getting adversely selected against, you call it, or picked off. So what that does is exactly what Dave is saying, is discourages market makers. You put your bid out there and you only get it when you're losing money, you're going to be less inclined to put that bid out there next time.
Yeah, I mean that's part, right along the lines of that IEX study. I don't remember the exact numbers, but it was something like 60% of volume getting executed within the 2 milliseconds around a quote change. I mean, that's crazy.
Yeah, picked off is what that is. So,
yeah, it's
I mean,
all
as a market maker, you're not going to want to put that 50-cent bid out there if all of a sudden it's 50-cent offer on you when you're getting filled on it. So if that discourages liquidity, eventually spreads get wider. Now, I want to throw this back to you too, is the only issue is what they've argued is spreads are still tight. Spreads are still narrow. I think I know where you're going to go, but spreads, are as narrow as that's we looked to 20 years ago and we looked at spreads now. Spreads are narrow. What are you complaining about?
Right, 20 years ago. Yeah.
That's what they do.
I know. The things are better than when fractions, stocks were trading by fractions. So what are you talking about? We should have 50 places for stocks to trade in 10 microseconds. So I think there are two responses to that. The first is actually, and I don't know if you saw this, but Alex Gurko, who's the CEO of XTX Markets, has been getting active on Twitter, which has been kind of a treat because the guy really understands market structure. He works at one of the largest high frequency firms, but he's not an internalizer, and so he understands the sort of disingenuousness of all these arguments. So his firm did a study and actually showed that U.S. spreads, when you take liquidity into account, are actually not as narrow as they could be. In Europe and Canada, they see tighter spreads as a factor of, in terms of when adjusted for the level of liquidity, right? The U.S. are the most liquid markets in the world. And so you can't just look at the spreads as they sit. You have to look at them relative to the level of liquidity, especially when you're comparing against previous eras or other markets. So I think that's item one. And then item two is this other study that came out from Hitesh Mittal, and it showed that, in fact, if all of that retail order flow were to be sent to exchange and therefore make market making more profitable and let market makers make tighter markets, that spreads could compress by 25% or more. I mean, that's a huge number. That's billions and billions of dollars that's being extracted from pension plans and mutual fund companies who have to interact against this lit NBBO. The economic cost of that really astonishes me. It was actually, we've talked about this for a while in a theoretical way, but that 25% number was really shocking to me.
What do you think the fix is for this? If it's not trade at, how do they start to take volume and get it off exchange? Like, I mean, and some people argue if you just kill payment for order flow while internalizers, off exchange market makers still arguing, we're still going to get that flow because we give them a better execution, we give them size improvement.
Right.
We can guarantee the bid and the offer, and it's just that relationship is already built. Is there a fix for this?
So part of it, my impression is, and this is one of the problems with market structure, right? You start to like pull on a string and you end up with like the entire mesh coming with it, right?
Right.
So one of the issues is SRO immunity that, now you talk about eyes glazing over, but what it comes down to is that stock exchanges are immune from legal repercussions for their operations that involve matching buyers and sellers. And so when a retail broker has a problem, when they're dealing with an internalizer, they can go to the internalizer and say, fix this problem, but they can't go to the exchange because they have no repercussions, so they don't connect directly to the exchange. So that's one of the issues in terms of legal immunity of a for-profit, publicly traded, self-regulatory organization. That none of this makes any sense, and it's all because of regulation. So we need to start to peel regulations away. We need to get rid of this SRO status.
I'm just curious. I'm going to pause it for a second here. you guys know that we do market structure Mondays every Monday. I'm at 8:35 on pre-market prep. If you would be interested in like some more evergreeny stuff, some more evergreeny content around market structure and explaining some of the concepts that Dennis and Dave are talking about right now, put a 1 in chat, because I have a feeling there's a market for this stuff. I feel like there's an appetite for it. And because there's a lot here that I want to know, for example, right? So put a 1 in chat if you want some, like, I'm thinking, short 3, 4, 5, 6 minute videos, just explaining the concepts that about dark pools, explaining what those are, explaining about market makers, what they do, the fundamentals of market structure. What Dave and Dennis are talking about right now is like pretty advanced because they've been doing this for decades. But let me know if you want some more like basic explainer videos about this stuff, because it is complicated and against all odds somehow it's become cool to talk about. So, all right, I see some ones. Thank you for that. I'm gonna make sure that happens. Fareed, the subreddit that Dave did the AMA on, I believe was Wall Street Bets.
So we need to get rid of immunity. If we want exchanges to be competing with each other, then fine, let them compete. And one of the things they could compete on is service to retail brokers potentially. So I think you do need to get rid of artificial inducements. That includes payment for order flow. That includes rebates. That includes volume-based price, exchange fee tiers. It includes everything. You have to get rid of any inducements to trade that aren't based on execution quality, and then you actually need to enforce best execution. If you start to do those things, and you get rid of SRO immunity, I think you bring a ton of trading back on exchange, and I think you really simplify the system instead of having this massively complex, fragmented system. I think it benefits everybody, but it's a big ask also.
All right, Dave, to bring it back here, how can people learn more about market structure? And there you see why I asked that question.
I mean, they got to follow Dennis on Twitter, right? So that's
follow this Dave. Dave, no, I've learned a lot from Dave Lauer over the last 10 years, I'll tell you. So Dave and Chris Nagy, and there's been a lot of market structure nerds there to talk.
It is. It's a great scene. And we're even Reddit has become a place to learn. And we're actually going to build a new site. We're calling it Irvin.finance, and we're probably going to crowdfund the funding for that. And part of it is going to be focused on getting better data into the hands of retail investors, because the data that their brokers are providing them is pretty poor. And part of it is going to be providing support for communities to do collaborative research together. And then part of it is going to be education and advocacy.
What kind of data are we talking about? Like short interest data or what?
Every high quality data set we can get access to, we're going to provide, and we're going to put it in context, because that's another problem, is people really struggle to interpret a lot of the information out there. But I mean, when I'm coming at it, I'm thinking market data, because that's what I'm used to, right? So we're going to provide the highest quality market data. The market data, like if you go on a big retail broker's active trading platform and just go look at time and sales, you won't believe there's even an order protection rule, because you're seeing prints outside the NBBO all over the place, and you're seeing this jumbled data because they don't invest any money in their data, and it's the worst data that you can find. It's been kind of shocking to me. So when people see conspiracies all over the market, a big part of that is they're seeing really poor quality data, and they're not having that data put in context for them. And so that's another thing that we're setting out to fix. And speaking of short interest, I think that's I wanted to bring that up and ask you guys, because Dennis, I know in terms of naked shorting, that's something that we probably will disagree on. And
I'm just curious. I feel I should have asked this in the moment, but because I use Fidelity, right? And whenever I place an order of Fidelity, I use it for like longer term stuff, and they always tell me, oh, you got X amount of price improvement, right? From your order, we improved your order entry by 5 cents or 10 cents or whatever. And I always wonder how accurate that really is. Like, did I really get those like savings, or is it the equivalent of marking up an item so then you can offer a discount back to the original. That's like, that's what I always wonder. I should have asked Dave about that. And just to be clear, everyone, this is a replay from this morning's pre-market prep. Dennis is not actually here with us now. This is a replay from this morning's interview with Dave Lauer. It's almost over, actually. We're going to get to the part where they disagree on naked short selling.
You have said on Twitter that you don't believe that this is occurring at all, or if it is, it's de minimis. And so I'm
think
curious.
It's small. I think it's smaller.
You think it's small?
Yeah. I think it's smaller than what everybody thinks. The thing is what it upsets me, because we're getting this big movement, and I like the movement.
Yeah.
And I think they're focusing on the wrong spot. I mean, naked shorting is already illegal. So, you can't really ask the regulators to make it illegal. It already is illegal. I mean, we do have a market maker exemption. Yes, maybe they could, curtail that to a certain extent, but you still need liquidity. So I don't know if I totally agree with that. But, I'd like the focus to switch from, this naked shorting. We got to stop the naked shorting to start focusing on stuff that you just talked about for the last 10 minutes is, let's focus on, getting more orders onto the exchange. I'd like that focus to move. So I think, where I'm trying to, with the naked shorting, saying I don't think it's a big deal. I wanted them to focus on the bigger deal. So I kind of wanted to switch the focus. But, talk to naked shorting for a minute, because I want to hear what you think about it as well.
Yeah, so I mean, I agree in some part. I do again, and that's why I talk about it. I do want the focus to be on this complexity of markets and this, these inducements and incentives. But from what I have seen, and for the last couple of years, I have been doing different types of analyses, including market manipulation, looking at public market data, and looking at court cases and enforcement actions. And I can, from what I have seen, it is a problem that is actually much more rampant than most of us would have thought coming out of a well-regulated entity. Like if you work at a place that has a strong compliance department and you're used to, dealing with all of these controls and back office settlement procedures, and the kinds of things that take place when you get your locates in the beginning of the day and how you have to manage that and any fails that happen, you come into it and you're like, oh, it doesn't really happen. And when it does, it gets resolved quickly. But then you start looking at some of these enforcement actions that are well documented in recent times, not like pre-reg show, but in the last few years, there have been FINRA enforcement actions, there have been private lawsuits, there have been SEC enforcement actions that kind of show, I think, a very tiny piece of a much larger problem. And I do believe that naked shorting is a big problem in markets, and I think it's often paired with market manipulation. And I from the studies I've been running, I've seen astonishing examples of clear market manipulation in public market data that is, as far as I can tell, not being
ridiculous. So I come with the Goldman lens on and think that, I don't see how this could be rampant, because if I was doing naked shorts, Goldman would shut me down. The Goldman is watching this. It's not just regulators. Goldman watches their customers and makes sure there's locates. And, we're very regulated at Bright Trading, probably because of Goldman. But maybe you're right. You get some of these smaller,
the same thing.
Smaller BDs, maybe it opens my eyes up too, because maybe some other stuff, maybe there is some shenanigans happening at these other BDs. I can't speak for them. I'm not with them, but it's, even though it's illegal, I guess it could happen. So, and you say you think it is happening at some of these smaller firms.
I've seen a lot of evidence of it. I'm someone that needs to see data before I can believe something is happening.
Yeah.
And I've started to see, and not all of it's public, because there's private litigation taking place as well. There's enforcement actions taking place, but it has surprised me the extent to which I've seen it. And then the ways that people are trying to roll fails over, right? So they can amass large fails, and then they can use synthetic positions. They can use options. I mean, there's even documented court cases of people pushing their fails out to offshore affiliates of large broker dealers to warehouse them, which is something I'd never even heard of. I still can't quite figure out the exact mechanics of how it would work, but this is in court cases where firms have settled because of these issues. So
can you give us a few examples of that?
I did post some recently.
We're throwing you on this. We're throwing you on the spot there. But.
No. It's so I had done an AMA on Reddit with Wes Christian, who is a lawyer who works on these issues and has been working on these issues for 20 years. And he had sent over some material. Here it is. So if you give me a second. Yeah, so it's just a slew of cases. FINRA against Credit Suisse.
Is it that the fines aren't enough? Maybe is that what the problem here is? Because it is illegal.
I think very much so. Yeah,
it's the fines. Maybe
I think that was a great point Dennis made, and this goes for everyone. This goes for the banks, right? This is why people think that Wall Street is dirty, is because these firms can break the rules and 6 years later pay 20, 30, 50 whatever, $100 million fine. Like what was the fine? I'm trying to remember man, was it Facebook? I don't remember. There was a big fine levied a few back in like February, I want to say, and like it came out to essentially like 1 month's worth of revenue for a company, which is like not really anything, right? I think we've got a long way to go. I think that's a great point Dennis made, is that these fines are not large enough to discourage bad behavior. This interview is almost over. Just saying.
Aren't enough.
Yeah, and I think regulators are not paying close enough attention to something like this. So I'm trying to find a good example here. A lot of these are from, because these things take a long time to sort of work through. But here, here's a Goldman case between November 2008 and mid 2013. So that was long, after post reg, after reg show, and it was this auto locate issue. Did you hear about the auto locate issue at Goldman?
No.
So you would think Goldman is really competent and strong with their compliance operations, but at one point they had more than 20,000 locate requests a day, and they had not increased the size of the team that was managing
by this action, yeah.
those responses, and so they added a key to their system at the F3. They added a command, the F3 key, that would just automatically auto-locate automatically, and that's all they did for all 20,000. So they never actually had the locates. And this was for 5 years they were doing something like this.
I think before 2008 and 2009, naked shorting was rampant. So I will say that is, I think, this was obviously something that regulators were hardly looking at it before the financial crisis, and financial crisis did bring this attention. Dodd-Frank came in, and they did regulate this more. And I do believe before 2010, even I say 2010, before it really all came in, the new regulation, that this was something. But because even like at Interactive Brokers, like I've been at Interactive Brokers for a number of years, and before 2010, I don't remember getting these buy-ins. And now you get, like, they don't locate it, they come in and they buy you in, right away, like they're trying, because they don't want to get fined. So there has been some positive change for sure from that regard, but maybe the process still needs to be obviously cleaned up here, and maybe the fines need to be higher.
Yeah, I'm seeing, again, a lot of these from 2015, 2016, these are not such old cases. And it just, I think that it's an area that we need a lot of improvement. And I think that we should see some better oversight, not just regulators, but private firms. As you're talking, the brokers who have the responsibility, the DTCC, who's, there have been some rule changes coming out from the DTCC, but I don't think anything that will actually make a material difference on this. And I know what Bill Hart's explanation, as you've been talking about it, on the 140% GameStop short, but you can't tell me that it makes any. I still don't believe that it makes any sense that you can have that level of synthetic shares out in the market, right? That you have more, because for every time there is a short that is failed, and that adds over and above the float, that's another share that someone out there bought and thinks they're holding, right? But actually isn't, unless that position ultimately gets delivered.
I mean, that's another issue.
Right, just to give context, so what Dave was referring to, Bill Hartz has been on our show before. Bill Hartz came on a few months ago and explained to us how, in his opinion, how a stock can have a short interest of greater than 100%. And what it comes down to is this term rehypothecation, where essentially the cycle of short selling, where you borrow and then sell to somebody else, that can repeat with the same shares endlessly. So I borrow from my broker and I sell to person A. Person C. I'm sorry. Wait. I sell to person A, for example. Person A can then lend out those shares, right, to short seller person B, who can then transfer to person C, and who can then also put those shares up to be lended out by their broker, and the cycle can repeat endlessly. So that's how the short interest. That's how Bill Hart says the short interest can get to 100, 200% endlessly. Dave is saying he doesn't necessarily agree with that.
All in itself that he's brought up, because obviously, there's too many synthetics. If you're lending the same shares again and again and again, I mean, that's a whole nother can of worms, which, right. I'm not sure anybody knows how to solve that one either.
Yeah, I think it's a big problem, and I think we need much stricter oversight on shorts and borrows and locates, and it's a dark area of the market. There's not a lot of transparency. It's one of the least transparent parts of the market.
This is all right. That was essentially the end of that interview right there. So again, that was our conversation with Dave Lauer this morning on Pre-Market Prep. You can watch the whole show right here, youtube.com/Benzinga. Pre-Market Prep is up there. It's there every day. You can watch the shows or listen to the show as a podcast. We're on all the major podcast platforms. So I want to hear that again for myself, because a lot of it went over my head the first time, and I think I have a better understanding. But again, this is complicated stuff. My biggest takeaway from here is that maybe we need some just basic education on market structure fundamentals, more evergreen videos, I think. But it is 1:59, so I do want to hop off the stream here. And before I do that, while I was doing the replay there with Dave, I saw a headline that DoorDash got some love from Hedgeye and spiked on that news, spiked up almost to 179 here this afternoon. So I saw that headline. Not much else though. More of the same that we were just talking about before. The same theme of the day is that Roku, Netflix, 3D stocks for some reason are just super strong. Well, 3D had news today, but SSYS is strong, XONE is strong, though they're both off their highs of the day. And that's the theme here. I guess it's just tech is ripping. NASDAQ is at all-time highs. ARKK having another good day. That's the theme of the day. So I'm going to hop off the stream here. A couple of streams starting right now. One, our crypto show. And if you are into economics and central banking, then check out our stream of Jerome Powell's testimony in front of Congress about the Fed's reaction to the pandemic. We're also streaming that as well. Everyone, please do me a solid and drop me a like if you can. I'd appreciate that. And that's a wrap for this stream. I'll see you guys a bit later for the At the Close show. We got Crypto Show and Jerome Powell starting right now.